And looking at the latest numbers to come out of the hotel industry, TRI Consulting, a hospitality consulting firm, has just released its new Hotstats survey for the Middle East for July, looking at trends in hotels in the region. We have Christopher Hewett, who is a consultant at TRI Hospitality, in the studio with us this morning. Christopher, thanks for joining us.
Not a problem. Thank you for having me.
Now, of course, having a look at July means we've been having a look at what's been happening during Ramadan in the hotel market. How does Ramadan affect the hotel market?
Well, Ramadan has quite a bit of an impact on hotels. Obviously, you get a drop-off in a number of segments. Corporate demand obviously drops off, as well as leisure demand. So you get a sort of a drop in occupancy during that period of time. And then obviously we have quite a drop in food and beverage revenues that comes through in hotels due to the closing of a number of outlets during the day.
Well, we've had Ramadan, of course, this year, and Eid during the summer months. How has that impacted the numbers from what you would normally have seen in both of those seasons?
Well, summer is always a quieter month, a quieter season. So Ramadan coming into obviously has a bit of an impact and makes it further, reduces the occupancies and profits further. However, a good thing that happening in summer is it's obviously going to not have too much of an impact on the overall profitability. If Ramadan were to happen in the peak months, which is going to happen in 5-6 years from now, you're going to have obviously two drops in seasonality. So
it's hard to understand the summer effect in many ways. I mean, Abu Dhabi is proving to be a very competitive market with a fairly fragile demand. This figure of July occupancy dropping 4.5 percentage points, although in general tourists tend to stay away, there has been increased tourism this year from other GCC countries.
Yeah, that's right.
Has that not kept the numbers up?
Well, if you look at Abu Dhabi, Abu Dhabi just released its hotel performance up until July, and there has been an increase in the number of guests staying in hotels throughout the city. What we noticed is obviously there is a drop in the 4 and the 5-star market, and that's obviously to do with the drop in the corporate demand that was happening during that time. Overall, we can see occupancy levels for the year are around are stable, and that obviously reflects the increase in supply of hotels that have come online. So the authorities are projecting a higher number of guests coming through, but because obviously the higher room count within the market, it's kept occupancies relatively stable.
Well, let's have a look at the separate markets that your Hotstats survey was looking at. The big winner seems to have been Jeddah. Hotels in Jeddah seeing a rise of around 31% this year for July, up on last year. RevPAR in the city up 15% on the same period a year before. What's that down to?
Well, Jeddah is is boosted by domestic tourism. Jeddah is the main area in which Saudi nationals travel to. Having problems with the Levant and other areas within the region has actually benefited Jeddah. Saudi nationals not travelling out to the Levant or Cairo, which are typically favourite destinations. So they've decided to go to Jeddah. It's a cooler climate. It's become a very popular destination for retail, and shopping and leisure is actually the highest contributor or the highest motive factor of demand within domestic tourism. So they've just benefited from a number of factors that have come through.
Well, a 31% growth in profits in Jeddah hotels in July alone, occupancies and room rates rising. Does Jeddah benefit also from religious tourism into the kingdom? Because then, in fact, the religious cities are quite away from Jeddah.
That's right. Mecca and Medina, the two holy cities, receive over 2 million visitors every year for religious purposes. Jeddah benefits from it in two ways. One of it is that it gets groups that come in before the trip to the holy cities. So you get groups that come through and they spend 1 or 2 days in Jeddah before, and they actually then benefit from 2 or 3 days after. So they sort of get a benefit from both sides, as Jeddah is the main port or the main city that leads into the holy
Hajj terminal at the airport.
That's right. Yeah. So that's where all the Hajj and Umrah passengers go through. So they go through that element there, and then they spend a couple of days in Jeddah and then move on to the holy cities.
What impact have we seen, or what numbers have we seen in Dubai and Abu Dhabi over the month of July?
In July, what we've seen is obviously a drop in occupancies. That's obviously attributed to Ramadan. Dubai has been actually quite strong because it's been able to leverage higher rates. Although there's been 11% drop in occupancy for Dubai, they've actually been able to yield higher rates, and that's actually helped maintain profitability during that period of time. A lot of that's attributed to hotels understanding that they can increase rates, and there is a bit of an appetite within the market. So that's where Dubai has been able to benefit from that.
There's been a lot of talk in Saudi about opening up the borders for non-religious tourism. What's the latest on that you're hearing? Is it going to happen? Because Saudi, surprisingly, has a huge number of really, really great tourist attractions, regional class attractions. Are we all likely to be able to go and see them soon?
Not in any time soon. I don't think that there will be any unrestrictions in the leisure tourists. I think that the tourist visas will remain very difficult to get, and obviously business tourism will be the main thing that drives it, unless it's obviously tourists from within the GCC that can travel into Saudi.
Well, despite a cautious return to Egypt, Cairo and Sharm el-Sheikh saw profits dropped in July, mainly due to lower revenues and higher costs. It's Egypt's largest foreign exchange earner, tourism, and it's vital for the country. July is normally the month that would see a whole influx of GCC tourists as well. Have they stayed away this year?
I think they have. 2012 has been a bit of a ongoing concern within Cairo, mainly just to do with the political issues that have gone on. However, now that the president has been elected, there is a bit of stability within Cairo, and I think you're going to start seeing a bit more activity returning. Corporate demand will come through, and I think you'll start seeing a bit more leisure demand as tour operators start putting Cairo back on the books. If we look at Sharm el-Sheikh, which has actually been quite separate in the way of performance, they've been quite strong. You've seen quite a high return of demand from the charter groups. However, the rates have been quite soft, and that's to do with the contracting that they do. Hotels within Sharm el-Sheikh normally contract out rates for a 12-month period, and obviously last year they sent out the rates during the downtime. So we think that the rates will obviously improve over the next 6 to 12 months as the contracts get released back into the market with a higher rate on the back of high demand.
What is your outlook for the rest of this year, for the rest of 2012, particularly for the tourism markets here in the UAE?
Well, I think Dubai is going to continue to be strong. Dubai benefits from having such a wide range of demand generators, from corporate to leisure to conferences, and I don't see that letting up anytime soon. If we look at how that will impact, or what is our outlook for the hotel market, we think we're quite bullish on Dubai. We think Dubai is going to maintain strong demand and good rates. Although there is quite an increase of supply coming onto the market towards the end of this year and then early into next year, we still think the demand is of a level that's going to be able to support that increase.
And in Abu Dhabi?
Abu Dhabi, well, demand for Abu Dhabi hotels is increasing based on the figures that are coming out from the Tourist Authority. However, because there's an increase of the number of hotels, there's a higher competition. So we think occupancies will probably remain stable, but we're going to see rates soften further as new hotels try to penetrate the market by undercutting the rates that are currently being offered.
Christopher Hewett is a consultant at TRI Hospitality Consulting, sharing with us this morning the latest numbers from the new Hot Stats survey from TRI. Thank you very much for coming in and joining us.
Thank you very much.